For us in our analysis, understanding the underlying security is a very important part of how we think about loan applications and our investment decisions. And part of the analysis goes to looking at systemic risks of markets overall, and from the Qualitas perspective, understanding the economic drivers to property. So for us, we gain a lot of comfort out of the fact that property is about, and in particular I'm talking about residential property, it's about the occupiers of those properties. There seems to have been a very large focus in more recent times on the off-the-plan residential type property sales. For us, it's about looking at, is there ultimately a need for that property that is being delivered into the market? Will there be an occupier of that particular property? Looking at the Australian population, the growth of the underlying population, and where that growth is actually occurring, which is in the major capital cities, what we are seeing is that rentals for properties in very high demand. In Melbourne, those vacancy rates in property are approximately 1.5%. Sydney can be a little bit higher at 2.5%. But fundamentally, what that demonstrates is that property is in high demand, either through owner-occupiers or through renters. And that gives us a lot of comfort that the underlying security that we're lending against produces very regular, predictable cash flows. So really understanding the actual security that you're taking in the form of a mortgage. I think that for Qualitas, it's not about a box-ticking exercise of looking at loan-to-value ratios and necessarily interest servicing. It goes much more beyond those guidelines into really understanding the actual property security itself and looking at the benefits of the ownership, the income producing characteristics of the underlying property, really understanding the fundamental business of the borrower, their ability to service the interest and to repay the loan. It's a much more granular analysis. We're very much focused on not entering into what I would call a set and forget relationship, which is a loan is written and you might revisit it every couple of years in respect of the quality of the security or the quality of the underlying borrower to continue to service the interest. We review our assets on a very active basis. We review them every 8 weeks in very substantial detail, and we look at, again, the fundamentals of why we undertook that investment loan and ensure that the fundamentals that existed at the time of the original investment continue to withhold and reappear.